Well, thank you for the introduction. And it's a great pleasure to be here at the Net Zero Delivery Summit and to see what a broad and important content it has as well. I want to start really by continuing that theme, and if you don't mind, slightly answering my own question to start with. But I think it helps to set the scene. So the question is, what is the Bank of England, or indeed a central bank's interest in climate change? And let me give you three answers to this question, which go right to the core purposes of the Bank of England. The first one is that I think we can observe the effects of climate change on the world economy. One of them is, for instance, what seems to be the greater occurrence of extreme weather events and the effects that those have. The second answer I give is that, turning to financial institutions and our role in financial stability, banks and insurers, for instance, invest in assets which are exposed to the various elements of climate risk. That's the risk itself and to the transition away from that risk to net zero. And in many ways, that was the origin of our work on climate change. The third answer I would give to the question is that the financial sector has a big role to play, which is obviously why we're here today, in financing the transition. And as public authorities, we need to do our part to support and encourage that. Let me just add two further thoughts before moving on. And to reinforce a point, unlike pandemics and wars, which are terrible and events that we're having to deal with, climate change, I'm afraid, is highly predictable. That's the reality. And there is, of course, therefore, no excuse for failing to tackle it. But let me end these introductory thoughts on a more positive note. A big challenge we face in the world economy is that the underlying rate of economic growth in many countries, particularly industrialized countries, has fallen. It's true here. Transition to net zero is a major structural change that needs substantial investment and can, over quite a prolonged transition period, help to raise the potential growth rate of the economy. And that's a good thing. But of course, it can only do that if we plan it and get on with it and get it right. But that is the challenge, and that's a positive challenge, it seems to me. Now, the primary levers for driving transition rest with governments through setting climate policy, with industry through innovation and investment, with private finance through allocating investment, and of course with all of us as consumers for making the choices that we do. Put like that, there's a huge coordination challenge, but I'm encouraged by the government's 2023 Green Finance Strategy. It commits to forming a net zero business and investment group to advise government on the needs of the private sector to mobilise capital. And as I've just described, we as the Bank of England have an important role. Our role is to ensure that the financial system is resilient to the risks from climate change and that it's well equipped to support that role in providing and allocating finance to support and achieve the transition to net zero. Now, we started work in 2015 with a focus on insurance, and we've moved on. We've moved on to supervising more generally banks and insurers against our climate expectations, to looking at potential vulnerabilities in the financial system as we transition to that low-emission world, and seeking to understand the implications of climate for the macroeconomy. Now, I'm sure that, like others, the road ahead will have headwinds in it. But I'm also very positive, and events like this make me very positive, that there is a very strong will to take this challenge on and tackle those headwinds. One of those headwinds is that we are facing supply shocks as we transition from the COVID challenge. Those are shaping the economic dynamics of this country. But in the midst of those headwinds, I think it's important, and events like today are so important, that we recognise that our future in respect of tackling climate risk is dependent on the actions we take now. So we will continue to address the impacts of climate change. We recognise that the economy and financial system are not immune from playing their part, and a very important part in that. And it's important, I think, that today's event focuses on net zero delivery and those priorities, how we can deal with them. And I want to emphasize the importance of developing the transition finance infrastructure. Because in order for the financial system to channel and allocate sustainable finance effectively, we have to put in place the key elements. What are those elements? Well, definitions of green and transition activities, definitions and a framework for climate disclosure, and transition plans. Now, my commitment through not only my work at the Bank of England, but also my work in the Global Financial Stability Board, where I chair the standing committee that takes on many of these tasks, is that we actually do this on an international basis, because, of course, climate risk knows no borders. So we have encouraging work going on. Work on disclosure, the International Sustainability Standards Board. The board is finalizing its requirements for entities to disclose information about climate-related risks and opportunities. We've sponsored this right from the start. We are now reaching the point where it needs to turn to implementation to allow it to be put into effect. Now, I know that will be done in different ways in different parts of the world, but one of the points that I emphasize strongly in all our interactions and engagement with this is that there has to be a spine running through it, if you like, a common spine with sustainability and disclosure standards, which mean that there is not only broad comparability, but broad confidence that we are achieving these objectives. That's very important. It's important because this work is fundamental to driving transition. It will create the right standards to ensure reliability of information. And that, of course, helps to protect us against abuse, which sadly does take place or is attempted. It will also, of course, support the efficient allocation of capital. When we recently in the Bank of England did our climate scenario exercise, the CBETS, what we did reveal was a significant gap in understanding of real economy firms in terms of what the transition to net zero means to them. In other words, the financial sector has quite a way to go in terms of understanding what the real needs of transition are. That means understanding how different scenarios are relevant to their strategies, to test the vulnerabilities in those scenarios, but of course also identify the opportunities that come with those scenarios and take advantage of them. Now, all of that work helps us to identify the risks to firms and, of course, ultimately the risk to all of us as consumers and users of finance, and allows us to take better steps to ensure that the economy is not impacted adversely as a consequence of transition not being optimal, if you like. So this year, the Bank of England will also publish our transition plan for achieving net zero emissions from our physical operations. It's our climate transition plan. So we really do all have an important role to play. And let me offer one path towards the solution, one that also helps us, I think, to identify and unlock opportunities in the economy. A firm could seek to reduce its emissions by disengaging from emission-intensive suppliers. But of course, that doesn't necessarily help to remove emissions from the economy. So the preferable solution is engagement and collaboration. Yes, delivering net zero will happen through individual actions, but we can accelerate progress by working collaboratively. So engaging with counterparties, suppliers, and customers to build an understanding of the actions needed to transform their businesses from where they are today to align to a net zero world and access the funding needed to do it is important. It unlocks opportunities. It helps us, by the way, to price the risk accurately, which is important for financial markets to play their part, and to phase out assets not aligned to a net zero world in a controlled way. So engagement and collaboration are important to building that transformation and that transition. It applies as much to us at the Bank of England as it does to everybody else, actually, in doing our own part in that. But I want to emphasize, both as Bank of England and globally, we will do everything we can to ensure that the infrastructure is built and put into effect that helps that transition to happen, that helps that disclosure, transparency, and pricing and risk management. And that's a very important task. And just to emphasize where I started, this is important because it's actually about risk to our economies today. Thank you.